Sunil, last time I spoke to you, I remember very clearly you said that a 25 basis point may not be warranted just yet, given the fact that the governor front-loaded rate cuts. We saw 100 basis point already. Growth is so strong. But now, what is your reaction? Market has taken it up with both hands. Are you happy, or do you still think that he should have kept that ammunition in the arsenal for now?
Right? And he's saying that I can't ignore the fact that inflation, but bear in mind that he's talking about 4% inflation reviving. So which means he expects his rate cut to actually inflate the economy. So it's clear that strategically he's on that path, and he's also adding liquidity infusion. So I think that this comes through very consistently from what he's been saying. Though, like I said, I would have preferred him to wait, but that's because I felt that the good growth, there's a danger of fueling inflation, but clearly he's comfortable with that. And two things there, consistency. One is that he already said that the situation is right for a rate cut. It's up to the committee to decide. So the boss had already given the directions. Second, currency question is answered repeatedly in press conferences, saying that we do not target a currency rate. Right? It's about the real effective exchange rate and preventing volatility. So I think that's where he's quietly avoided the currency issue just to say we have enough reserves to tackle it. So I think very well handled policy. And I think the Goldilocks situation in the economy of a strong growth but declining inflation, he has not allowed that to prevent him from further supporting growth. So I think he's taken a tactical call that growth is more important than inflation. I think that's clearly a tilt seen in this policy.
Sure, and of course on the inflation mandate as well, till now at least we were sub 2%, so that was already a very comfortable position to be in. But Namrata, I'll come to you again. Couldn't get half of your answer. If you can share your thoughts on whether you are happy, that's what you were expecting, and secondly, given the kind of growth forecast he's given for FY27 first half, do you think we are now done with the rate cut cycle? This was the end of it?
I think we still have a scope for at least one ultimate rate cut, maybe in the February policy. And we have to also remember that even as your real growth is jacked up, but your nominal growth is contained. And I think we also have to wait out for the new GDP and the new CPI series, which will release in February. And that will be a much more robust, and it will be much more representative of the new set of activities or new set of purchases that are happening, and a lot of these forecasts could undergo revision once your new series also come in. But we're in the camp that maybe one more rate cut is left for the February policy.
Sunil, would you agree or would you differ on that? Do you think we are done for now?
No, I think that it depends on the GST, post-GST quarter GDP growth numbers. I think if they surprise on the upside, right, the next quarter's GDP, then we may not need to do that. The economy is picking up speed, because he mentioned that private capital is also picking up speed. So I think it will be data driven. So I think it's early days to say about another rate cut, because the point is that he's projecting inflation to go up to 4% by Q1 of next year. So which means in that scenario, whether he can do a rate cut, I don't know. The only thing supporting a further rate cut, I will tell you, is that the fact that real interest rates are still very high. Okay. So I think that he is data dependent. So I think that, very often you see now and earlier what's on your screen, right? RBI's data keeps getting revised. So today to say that these future data will actually come through is also a big risk. So I would say it's got to be data dependent. If inflation goes back to 4, then it's tough to do a rate cut. But if it stays at 2 to 2.5, then another rate cut is possible. I think it's got to be data dependent in terms of the forecast.
Sunil, what did you make of the messaging from the RBI? As you already said that, of course, Goldilocks scenario plus the liquidity boosting measures, better for NBFCs in that sense, because do you think banks have the stomach to, have the capability to stomach this rate cut? Margins were under pressure, no big pressure as such, but SBI, in fact, I think reported margin uptick of 4 basis points in the last quarter. But going forward, banks, do you think they have the capability to stomach this rate cut, or would you play it through NBFCs and PSU banks, this rate cut? How would you look at it from a banking perspective?
I think two things here. I think the banks have already shown that. If you see the Transmission in the deposit rates is 105 basis points. Transmission in the loans is only 70 basis points, right? So clearly they are playing this to their advantage, right? They are aggressively cutting deposit rates for new deposits, right? And they are not cutting much on the existing. Existing you can't cut because you don't reprice a fixed deposit. But I think the key element there is that the banks are taking advantage also to improve their margins. But I think that they are also doing that because they want to have the firepower to lend when private capex truly picks up. So I think that this is a good news for the banks, that the data already shows that they have taken full advantage of rate cut on their borrowing side, and on the lending side are keeping firepower. So it's good for the banks. For NBFCs, their primary source of funding is the banks, right? Or either even if they come through the capital market, it is the banks and the mutual funds which subscribe to that. So they are ultimately dependent on that, and so the overall reduction is going to benefit NBFCs too, because by and large NBFC lending is fixed rate, whereas bank lending is largely linked to a variable rate, marginal rate funding. So to that extent, I would say NBFCs will benefit, because if your cost is going to go down, but your fixed rate loans will take time to run off, right? So NBFCs definitely will benefit from this move that's happening.
Sunil, looking at the reaction, no matter what you do, mid-caps don't want to participate. Even today, mid-cap is in the red, breadth of the market again negative. What's your sense? At least, this should have come as some kind of a reprieve. We could have at least seen some kind of a good knee-jerk reaction on the mid-caps. That really hasn't happened. What would it really take for broader markets to participate here on? Of course, we are looking at a trade deal end of the year, and reports are suggesting that a US trade team will also be coming to India next week. But nothing seems to be really working as such.
Yeah, I'll tell you what, the reason for this is that the DIIs are preferring to buy large caps. It's clear and simple action by the DIIs. And when will that change? I'm going to give a very contra opinion here. It will change when FIIs come back. Because when FIIs come back and they start buying large caps and larger mid caps, DIIs will sell those to them, booking profits, and then divert that to mid caps. Today for them, from a safety plus this perspective, large caps give a much better space, and banking index, you know that, right? It's 35% of the large cap index. So banks and the large caps tend to go hand in hand, and so it's a DII action, and that will change only when a FII comes in, because today DIIs are still preferring the safety and comfort of large caps. And another reason for that is that when they want to shift later, it's easier to get rid of the large caps without a price action impacted by their own selling. Whereas if they stock up on mid and small caps, want to change strategy, there's a transaction cost involved. So I think that they are playing it safe. And when the FIs come back is when you'll see a broader market revival. It's a slightly contrarian view, but that's the way I see it playing out. And for that, the growth, and also ask you, Nandita, to answer your question, what will it take for mid-caps to grow? The growth has to come back very, very strongly. What's on the table is just justifying mid-cap valuations. It's not yet, upward biased. And small caps are disappointing. So from the earnings relative to valuation.
That's true.
So that has to change. We need a far higher growth rate from mid-cap and small cap now.
Talking about the market once again then, Sunil, in terms of some other rate sensitives, I want to point out real estate is one that has really not participated. It has been on wobbly ground, even in this leg of the, nifty up move. YTD, if you see, real estate sector has been badgered out of shape, really. But time to look for value in this pocket now that another rate cut has come by?
Absolutely. Because I think that the GST cut impact hasn't been seen through for two reasons. One is that people in the festival season will not buy homes. They buy visible goods like consumer durables. And even in the summer, you'll see them focusing more on refrigerators and air coolers. It's only subsequent to that the leverage impact of the banks passing on. They've only passed on 70. I think that's got to increase in terms of the rate cuts. The EMIs dropping will have a very good impact there. But the other problem for the real estate sector is a supply side situation, because I think developers, because of the demand seen, have only been building high-end properties, villas and that like. So they have now to look forward to taking parcels of land at the outskirts, doing affordable homes. And when that supply comes in, demand will follow. So from a year's perspective, I'm very bullish on the real estate. And today, I think, obviously, from a rate sensitive, real estate is already showing a strong pickup, I think, last that I saw. So I think that, yes, it's a good time to start buying real estate, but keep a year's outlook at least in mind.
Sunil, I just want to get your thoughts on the banking sector again. In terms of PSU banks in particular, there were hopes of a slew of reforms which have now been kind of shot down by the government. Which is why we saw PSU banks correcting as well in the last couple of sessions. But does that dampen sentiment, or does that dampen the case for preference over private sector banks to PSU banks? How would you look at that?
I don't think so. I don't think so. In fact, the correction represents a buying opportunity according to me. And the reason for that, yes, the hike in FDI stake to 49%, foreigner stake was what was dampened by the government. But the RBI governor himself mentioned that we need for India to have larger size banks, right, to compete in the global scenario. So I think that the bank merger is still on the cards, and that might come at the budget time. So that's a huge positive waiting to happen. That's number one. Number two is the private capex revival, I think, will be funded largely by the PSU banks. So I think that when that really comes through in a year and a half, you'll see private sector, public sector banks loan growth grow strongly, with NIMs also expanding because those loans are at 13-14%. So I still retain the fact that PSU banks are a good bet from a medium-term perspective. Any price correction, in fact, is a good opportunity to accumulate more.
Sunil, I asked Namrata what she would be expecting from the press conference, what she would like to hear, but what is it that you would like to hear from the governor in the press conference?
I think the press conference will be hijacked by currency, because I think the press is more worried about currency, the public are more worried. So I think in some form or other, everybody will come and hit the governor with currency. He has to play defense on the currency because he's not going to reveal anything. So I think apart from that, all of it will fade into oblivion. I think market is, not market, but the press and people. That's what 90, but that's a psychological number, right? 90. So I think that's what the press conference is going to be all about. So I don't think really much is going to come of it, because he will just deflect those questions.